Hello traders of Inside FX Link, and I'd like to welcome you back to another episode of our awesome Forex Weekend Market Preview. So this week I'll be taking you through one of my favorite pairs, which is the dollar yen, where I'm looking at a possible long end opportunity. So without wasting any further of your time, let's get straight to the charts. So the first thing we also want to do whenever we get on the screen is to be able to identify the overall direction of the market. That is our first step here at FX Link. So as you take a look at the chart, what do you see? Are we going up, down, or sideways? Now the easiest way you can try to identify the direction is to look from the left of the screen. The lowest low from your left on the screen, and just take this tool and drag it up to where price action is currently at. And as you can see, this tool gives us a slope to the upside, giving us a clue or sign that price action is in an uptrend. Now, once that is out of the way, we know that price action is in an uptrend. The next thing we want to do is to form a bias or a decision on whether we'll be buying, selling, or either standing aside. So it's pretty obvious that we identify that we're in an uptrend. So the obvious answer will be, oh no offense, I know we have to buy. But Forex isn't as simple as that. I think you'd agree with me that it's easy to know if you're buying or selling. The most critical part, or the most hardest thing to do, is knowing when to buy or when to sell. So this is where for me to try to pinpoint exactly where do I sell, I'll take one of my tools that I use, which is my retracement tool. The retracement tool just gives me key levels of turning points where I expect this short-term trend to start fading off. So I take it from this X leg up to my A leg. Okay. And as you can see, this way price action gave us a slope to the downside, hit our 786 and started reacting, giving us a bit of a relief to the upside. Now, another thing I want to see, okay, I do have a Fibonacci level, so I give it a point. But I cannot just take a buying opportunity based on one thing I see, which is a retracement. I need further extra more confirmations. I need to build a case for entry. So another thing I see over here, I take this tool for my A down to my B leg, and let's take it and clone it from our C to D. Now look at where do we get the completion of our D leg. Right here we get our 786. Beautiful place. So we did get a retracement 786. We just got a completion of our ABCD pattern, and as you can see, guys, we're slowly building a case for entry. Now another tool that I like to use is my extension tool. Back to where we got our A, then this becomes our X leg to A, and as I pull it right back up, look at it, bam, right here where we got our 786 extension. This is where we get our 127. So we have our 786 and 127 extension cluster, and this is where we did get a reaction. So if we were taking down this pair this past week, this would be an area where we should have had a long opportunity. So it's no bigger, still early in the trend. We could look for a place where we could hop in this trend. So I have extension, check. I have a retracement, check. I saw the overall trend in an uptrend, check. See, slowly but surely, guys, I'm building a case for entry. So another thing, which is one thing that I cannot take a trade without, is a bullish divergence. In this case, we're going in an uptrend, so I'd want to see a bullish divergence. And as I take a look from my RSI, drawing this tool, we're slowly but surely forming a sequence of higher highs. And if we try to do the same thing on price action on this area, we're slowly but surely having a sequence of lower lows. So at this area we do get a bullish divergence. So After taking a look at my higher time frame, I have all the necessary confirmations I have for my trading plan in order to confirm that this is a buying opportunity, and this is where I'll be ready to take this buying order. Now, of course, everything is still vague because we're on a higher time frame. We didn't exactly pinpoint where we were supposed to have an entry point, but we saw the overall trend. We saw that even the big boys or the big players who are trading on a daily time frame are also looking for a reversal turn and looking for a chance to go on an upside. So let's switch to the lower time frame to see exactly how do we take advantage of this long opportunity. So right down to my 60 minutes, this is my execution time frame. This is where I place my trades and take my profits. So the first thing I want to do is that I want to take my retracement tool. Again, I want to see a key point where this uptrend is likely to reverse. So I take it from my X back to A. Okay, and right here at this level, this is where I get a 1618. And now, because hence I always emphasize, I cannot take a trade based on one thing. I need more confirmation. I need a reason. I need a solid case. Again, I'll take my extension tool from my X to A, because this seems like this is where this price is most likely to turn, to give us a bit of a relief, and we'll see back up to this area. Bam. Right here where we got a 618 retracement, we also get a 1618 extension. Let me try to zoom in to make sure it's all visible for you. As you can see, this we got a 618 retracement. Now here we get a 1618 extension. So let's try to draw out a zone to try and get an exact kill zone for us. So as you can see, this way price action give us a retracement right in between 161 extension, 618 retracement. So somewhere in this area, this is where we try to narrow down our exact kill zone. So as soon as price action gives us a push to this area, as soon as we get a slope down at this area, this is where we're gonna wait for our first confirmation, which is first we want to see a bullish divergence. Hence I always try to emphasize my first confirmation I want to see as soon as price action gives me a push at this area. I want to see a bullish divergence. And the second thing I want to see is a double bottom, pardon me. So meaning, okay, let me grab my tool. I'll wait for price action to give me a retest back up to this area, and as soon as we get a bit of a relief to the downside, this is where we get at a decision point. Right here at this area, as soon as we get a bit of a push and a retracement back to this area, this is where we get to what I like to call a decision point. Now, what is a decision point, and what do we do at a decision point? Number one, as the word is self-explanatory, this is where you decide on how to get into the trade. There are three options that I personally get to when I get to my decision point. Number one, as soon as I see price action from this area, from here, okay, what is K? As soon as I see price action starting to give me this from this area, starting to give me a slope down to retest my previous low. Now you have a choice at this point. If you're more aggressive, you could already be putting in a pending order. One of the choices you have at a decision point, as soon as you see price action hit this level and start to give us a retracement back to retest this area, you could already put a pending order, so you can be entered immediately. That's the first option. Number two, you could wait to get a valid double bottom. As soon as price action does give us a push down to this area and validates our double top, you could now sell at market. As soon as we get that close, validating our double bottom, you could sell at market. And the third option, which is what I particularly prefer to take, is that as soon as I do get a valid double bottom, I'll wait for the next bar market. So after a valid double top, I'll wait to get a bullish candle, and after I do get a close of that bullish candle, that is where I'll be most likely to take the trade. So somewhere around this area. Now, assuming that things go as anticipated and we do get all the confirmation that we were looking for, how will our trade look like? How will we put our stop loss? How will we take our profits and go buy our new Mercedes Benz? So assuming that we do get an entry, a valid entry signal somewhere inside our kill zone. And I cannot say specifically where, but just around our kill zone, depending on where we get a validation from our double bottom, just so we have an exact entry point. So first off, stop loss would have to be below this lowest low. And as you can see, we're at 21. So if I'm looking to give market space, approximately I'll be looking to put it at 30 pips. We're looking at a possible risk of 30 pips. And for our take profit, our first take profit would have to be back at this retest of this imbalance. This could be the first take profit, and already we're looking at a take profit of 67 pips for initial risk of 30 pips. And already we have a 1:2 risk to reward ratio, which is a pretty good trade to take. And if you're looking for extended targets, as soon as price action hits this area, this is where we'll be looking to break even and wait for extended target back retest the structure, back at our highest time, back to this retest the structure. And in total, we'll be looking at a total of 142 pips. Now, hope you enjoyed our content. So yeah, this video is pretty much done from here. You don't need to continue watching if you don't want to watch. But guys, I just thought I'd take a moment to thank everybody who's been showing us support, who's been giving us a thumbs up on our video, who is already subscribed and find our content very valuable. I appreciate your support, guys. Please, as soon as I make the $1 billion empire, I'll be sure to remember you. Make sure to hit the subscribe button below. And for me, Offense Dube, I'll see you next time. Peace.